Hello everyone, Ignatius L. Jackson CPA here with another awesome video for you on my YouTube channel. Today we're talking about what my shirt says, put your kid on the payroll. Okay, so this is an awesome topic. Stay tuned if you have kids and you have a business, a small business, and you're the 100% owner or you and your spouse are 100% owner combined together. This is a great strategy for you to use in your business. And so let's think through this and see how we can save you tons of money on taxes by just putting your kids on the payroll. So go ahead and stay tuned. We're going to be right back in a second. All right, everybody, and we're back. So today's topic, I'm so excited for it because I love this strategy. It's an awesome strategy, but it does require work. I just want you to be very clear that it does require work. It's not something that you can do very easily. Once you get it set up and you get the process down, it becomes easier. But initially getting it going can be a little complicated, especially when you have an S corporation involved in your business. It gets even more cumbersome, okay? And so the great thing about this strategy is if you do it the right way, up to about $12,800, maybe a little bit more depending on what year you're doing this for, you will be able to save money on payroll taxes and income taxes, okay? So not just income taxes, not just payroll taxes, but both, especially when your kids are under the age of 18, okay? Now that only works when your kids are under the age of 18, just to be clear, not paying any payroll taxes. When they're over 18, you unfortunately do have to pay payroll taxes when you're paying them through the business, but it's still a great strategy to shift some income, especially if you're higher income and you're killing it in your business, okay? So how do you do it? Here's the skinny and the short on this. If you have children that are under the age of 18, the way that you're going to do this is most likely you're an S corporation if you're concerned with the strategy, because generally that means you're making more than $40,000 or $50,000 a year in profit before you pay yourself. Okay, if you're not at least making that much, you could technically do this strategy, but really, why are we? You already have a pretty low tax rate, more likely than not. So, but it could make sense in some cases. Okay. So, but generally you're going to be an S corporation. You're generally going to be making a decent amount to be an S corporation. So you can't just pay your kids directly from the S corporation. I will say that again, people. You cannot just pay your kids directly from the S corporation. You have to put a buffer company in between the S corporation and your kids' bank accounts. We sometimes refer to it as a family management company. Sometimes it's referred to as just a house cleaning business, or I shouldn't say house cleaning, office cleaning. Usually you're going to be, it could be house cleaning if you're doing it for your rentals potentially, right? But, it's going to be some sort of janitorial services, landscaping, whatever you want to call it, okay? So if you go into the bank saying, hey, I want to set up an account for a family management company, they're probably going to look at you like, what are you talking about? And so you don't want to tell them that. What you want to tell them is, I just need a sole proprietorship bank account. You could even use your social. You don't even need an EIN number. And you're just going to say, I need a separate account for a new business that I'm starting. And just make a call. When they ask you what is it going to do, just say whatever it is that the kids are going to be doing for you. It's general administrative work for various companies, or janitorial services for office buildings, or whatever the case is, okay? And then they'll go ahead and open the account for you using your social, and not necessarily EIN number, okay? So great way to do this. You got to put a buffer in there though, okay? So you transfer the money from your S corp, you move it to this buffer company, the family management company, okay? And then from there, you're going to move it to your kids' bank accounts. However much they've done work for you, you want to keep some sort of timesheet or log of what they're doing, what day they did it, how much time they spent doing it, and what a reasonable rate per hour is, okay? Don't get crazy here, people. Just don't get crazy, all right? If everyone else in your business is getting paid minimum wage, then your kids should be getting paid minimum wage more likely than not as well, Okay, if everyone else in your business is getting paid $50 an hour, but they have educational requirements for that, then your kids probably shouldn't be making $50 an hour if they don't have the education requirements for that position. Okay, so you have to kind of keep it reasonable based on what it is they're doing and what a fair rate is that would be paid for that service if you were going to a third party. If you really want to make sure it stands up in audit, do not just pay your kids for the sake of paying your kids. They have to actually be doing something for the business. I cannot stress that enough. This is where most people will go wrong with the strategy is they're just paying their kids and they're not really paying attention to the actual rules. They have to actually be working in the business. And if they're doing that, setting up the transfer from the S Corp to the family management company, then from the family management company to the kids' bank accounts is a great way to save thousands on taxes. Okay, so let's say you got two kids, and let's say they do enough work to make $7,000 or $8,000 a year in the business for each kid. So that's $7,000. Let's just say $7,000 for each of them. All right, 14,000 total. That probably saved you if you got let's just say you got a 20% tax bracket. So that saved you $2,800 in taxes. Okay, plus the 15% in payroll taxes that you might have had to pay as well. So this is why the strategy is so awesome and so cool, is because, man, that's pretty awesome and sweet that you can save that much just from paying your kids, which you're probably paying for their crap anyways. You're paying for their school or tuition, you're paying for their soccer, you're paying for their football, whatever sports teams they're doing. You're paying for their books and stuff like that you might have to pay for. You're paying for them to go hang out with their friends, birthday parties, etc., etc. So why not let them work for it in the business and save yourself money in taxes while you're at it? Plus, it teaches them good work ethic. Okay, this is why I love this strategy. It teaches them good work ethic to where, especially if you have a lot of money, it doesn't make them too spoiled. They understand, hey, they got to work for stuff. You're not just going to give it to them. So those are all important topics and things to teach your kids that I think everyone should kind of strive for. Okay, I'm all about building generational wealth, and this is one of the areas where you can help to do that. Now, I've talked about this before on a lot of other episodes, so I'm not going to, hone in on it too much here. But if you want to take this to the next level, okay, paying your kids is here. Next level, bam, it's off the screen. It's off the screen. Like I can't even chart it. Okay, is by putting the money that you're paying them into a Roth IRA. Okay, continue to pay for the crap that you were paying for anyways, but put the money into a Roth IRA. You will be setting your kids up for life. I'm telling you. If you put $6,000 into a Roth IRA when the kid is, let's say, 10 years old, let's say they at 10 years old they're able to do enough work to make $6,000 in the business, and you put $6,000 a year into that business or into their Roth IRA all throughout, from 10 to 8 to 17 years old. So that's essentially 8 years worth of contributing to a Roth IRA. By the time they reach 50 or 60, they very well could have, I don't know, I've done the math on this before. I think it's somewhere close to $1 million, a little bit more than $1 million. I think when it's all said and done, depending on how you are strategizing the investments inside the Roth IRA, and whether or not they take money out for college or stuff like that. Okay, so it's a great college saving strategy, to put the money into a Roth IRA, because you can always remember pull out the contributions anytime you want for any use you want, tax and penalty free. Okay, so it's a great strategy. I love this strategy of paying your kids. Now, this video is, again, short, sweet, and to the point, so we're barely grazing the surface on this. I've given you the key points to this strategy, but you really do want to make sure you're paying attention to this and you're doing this the right way. So you want to work with a professional that understands the strategy, knows what's going on. It doesn't have to be me. Frankly, I'm so busy that I can't help everybody. But you at least want to have this conversation with your professional, and if they don't understand what you're talking about, then it's time to look for another professional, because they should know this stuff and they should be more than happy to help you save money on taxes by doing this the right way. Okay, and as long as you follow the rules, this is not a risky area. It's something that you can easily do I shouldn't say super easy, but easy enough to where it makes sense to do it for the amount of money that you're going to save in taxes. So this has been another awesome video on my YouTube channel. Hopefully you guys enjoyed it. It's a great strategy. Put your kid on the payroll is the name of this video. Put your kids on the payroll, okay? I cannot stress that enough. If they're working, if they're old enough to work, put them on there. Save yourself money on taxes. Build their, work discipline. Makes them better people, and you're setting them up for life if you do the Roth IRA. I guarantee you're gonna be so phenomenally impressed by just putting that money into a Roth IRA and letting it grow over 40, 50, 60 years, however long it's going to take to grow to wherever they might need it. Okay, so this has been another great video. Hope everybody enjoyed it. We will talk to you some more later. Don't forget to subscribe, like, share, all that good stuff, comment. We're going to be back with more in the near future. Hope everybody has a good one. Bye.